you, traders. I hope you're well. Just a quick update. We are currently in Euro Aussie short. We've taken a high test bar, retesting the old support level here at around 12925. As I'm sure you're aware, old support becoming new resistance here. It also correlates with the edge of the cliff before it comes down to the low here of, I believe February this year. It kind of correlates with the 50% level. It's not quite a test, but we can't really assign it to a Fibonacci level for that reason. However, as any market will reveal, once you have a break of support and we get a retest as resistance, that's generally a very powerful confirmation before we get the continuation. And this is what we've seen here by a high test bar on the daily time frame. And a high test bar is generally very bearish. Okay, so we've placed an order just below the low of this high test bar, stop loss above the high, which is a very safe entry and also a very safe exit. Suffices to say that our stop loss is at a point where if the trade is well and truly invalid, then it's finished. Okay, so we're very safe with our stop up here, and we are looking to get the continuation of what we call phase one. So we're looking for this whole retracement or complex retracement here to completely break down. So for price action to completely bust down through this minor trend line down here to make a lower low, because don't forget that we are in a protracted downward trend anyway. I look at this downward move all the way through 2009 and 2010 and 11. We had a complex retracement here on the weekly, and we're just looking to get in at the start of the continuation down to a new lower low. So we are positioning ourselves at a point where we could potentially see a very decent downward move. Okay, and it's got decent reward to risk as well. So if we're wrong, we lose 1% or even 2% in our cases, as we risk 2% per trade. But if we're right, well, we've got a very good amount to gain. We've got in excess of I would say 10% if we're going for a lower low as well, bearing it that's of 2% risk per trade, that is. We've also got a daily divergence here as well. With we've got a higher high here and a higher low on the price action, but the RSI here is looking very sluggish, and it's not liking the fact that we're being pulled up here. We've got a lack of strength here with the buyers and sellers on this RSI oscillator. And now we turn our attention to CAD Yen. Yes, another random cross-currency pair, but to be honest with you, these cross-currency pairs are underrated, and for that reason, we want to pay attention to them. They've got some really strong technical setups here, and I'm going to walk you through this one here as being a potentially strong candidate. We've got this low test bar here. Low test bar on its own is a decent heads up for a long position. Okay, and where is it low tested? This is today, Bank Holiday Monday in the UK. If it's bank holiday or not, whatever, who cares, It's just another day. So the low test bar speaks volumes. We've got this level here, an old level where we've seen a sharp retest and consequential level of resistance now turning as support here. So if we draw this level in, we can see instances in the past where we've seen testing going on here. So if we scale back a little bit, we can see that actually in the past we've seen some decent levels testing off it, like so here as well. But that's besides the point. It's not just this level that's actually gaining me confidence in this trade. We've also got some Fibonacci levels as well. So if we would take it to the very bottom, do we get a Fibonacci reading? Let's have a look. Take it from the very start of the move upwards. We haven't got a Fibonacci level. No, it doesn't line up with the 50 or the 61.8. Take it from this swing low here, like so. Do we have Fibonacci level? Yes, we do. It's come back halfway. So the 50 or 0.5% Fibonacci level. Please bear in mind this isn't a bona fide Fibonacci level, actually. It's just a psychological extent to where something's retraced before a potential continuation. This is a complex retracement, but we can anticipate a continuation. Let's have a look to see we've got what we know as a Fib cluster. So here we take it to the very top. It's just overshot the 50, so not really. So we do have a Fibonacci level, and it has kind of come back to 50. But one thing I want to draw your attention to is the absolute low points, all the way back in 2011, October, all those months ago, hey. So here we take the very bottom, take the Fibonacci from the bottom to the top, and we can see here that it's respecting the 0.380 Fibonacci level, which is a shallow retracement, but from our experience, the shallow retracements are the ones which generally have more kind of oomph in them, because the fact that it's only retraced a small amount rather than back all the way to the 50 or 60, and value is perceived here with the buyers, goes to say that, hey, more people have confidence in this, and the fact that value is sought here goes to say that, this is a real value point where people are buying, okay, in anticipation of the extension. It could go up to here, it could overshoot this level completely, and if it does, fantastic, at least we're in the trade. So what we're going to do, we've actually got divergence here on the RSI as well, bearing in mind we've got a lower low here, at this point here, yet we've got a higher low here, like so. So the RSI is not agreeing with the price action, which is exactly what we want. So we've got an amalgam of reasons. We've got a confluence of factors to go long here. Okay, it's off a horizontal level. We've low tested on the daily. We've got RSI divergence. We've got a fib level. The only gripe I have is the fact that we do not have a higher low on the hourly. Okay, so for that reason, we're going to place an order just above the high of this low test bar and have a stop loss just below the low, and we do not have a higher low on the hourly. As you can see here, we've just got the extreme low and it's just come back. I'd ideally like to see a kind of W formation here in this price action, like so, like a higher low here. It doesn't quite go down to this point, but it just makes a higher low and breaks a neckline subsequently tomorrow. We haven't got that. However, we've got a sufficient amount of reasons to go long. That's why we're going to take it anyway. So as you'll see with our precision trade alert service, orders will be just above the break of the high. Stop loss will be just below the low, and we'll look to ride this conservatively to this point here, and that will correlate with like a very kind of minor trend line, like so. But obviously we'll look for the break of this level, like here, because trend lines are very psychological, they're not very solid, and I'm not going to let this trend line get in the way of our trade where we have more reasons to go long than we do short. Okay, so this is the update for Monday, the 7th of May. I wish you well.